I think half of the new Finnish Business Council board. I think you can all wave from your desks or beds or wherever you're taking this call from, if you have a camera on. But also, we have today Mr. Teck Keng, who is a managing partner at YTK Management Consultants, and Mr. Yeo is a Singapore Chartered Accountant, practicing management consultant, and accredited tax practitioner for income tax and GST. And he has been with more than 10 years of experience and knowledge in finance and tax, and he has been advising clients in the areas of tax incentives, applications, tax compliance, consulting, and planning for local and multinational companies. And today we have a pleasure of learning from him. Let me just see if I can share this. We have a few, sorry, my computer just crashed when I tried to do this earlier. So let me see if it works now. Just a couple of housekeeping matters for the webinar. So can you see my screen now? Nina, can you confirm?
Sorry?
Can you see the screen?
Yes.
Yes, we do.
Okay, perfect. Or the slide. Please, everybody, keep your microphones muted during the presentation. You can write your questions during the whole presentation in the chat box. And there's a couple of breaks during the presentation where Mr. Yeo will be answering your questions. So we don't need to wait until the end, but don't jump in the middle. It may get a bit messy. So just write your questions in the chat box and we will address those later. And then at the end of the session, there will be longer time to ask questions and have a conversation with Mr. Yeo. And I think the presentation is going to take around an hour. So, and of course, then the Q&A in the so that's all from me. Welcome again, and the floor is your. I can stop sharing.
Thank you very much. Thank you very much. Let me just share my screen first. All right. Good morning, everyone. My name is Teck Keng. Yeah. Let me just have a quick introduction about myself. I'm the managing partner of YTK Management Consultant, a firm providing accounting and taxation service. So today we are here to talk about Budget 2020. I think yesterday night was also a very lengthy night for most of my team members because we have the extension of the circuit breaker to 1st of June. Then there's some updates regarding what is the government supporting the local SME or the MNC. So we have been busy trying to updating the slide and confirming some of the news for you. So these are some of the things that we will be sharing with you later on our slides. So without further ado, let's just go into Budget 2020 highlights. Now I think when we are first preparing this PowerPoint slide in the beginning for the first budget, we are focusing more on educating our audience on what is the purpose of the budget 2020 and what is the goal and what is the objective. But as the time goes along and we are seeing that COVID-19 has affected a lot of the business here in Singapore, I think as well as the world. So we are going to talk a little bit more on the impact of COVID-19. What are some of the changes in 2020? The tips to maximize some of the returns, because I think we want every single one of you over here to try to maximize some of the tax incentive that is given by the government. The GST changes, some of the government support such as the schemes and loans, or what are they trying to do, we'll be touching on over here. some of the protection of the businesses, as well as some of the tax consideration regarding the intellectual property. Altogether, there are probably about, I have 99 slides, so but I will try to, some of the slides are much more easier to comprehend. So I will go a little bit faster. Let me know if you need me to slow down. You can just type it as a message or give me a wave or something like that. So I mean, which business have not suffered under COVID-19? I think that's the question that all of us need to really seriously think about. I mean, we can no longer go back to the old times where, after the whole COVID-19 saga has finished, then we go back and say that, all right, things are going to be back the same. We are going to continue to do our business. But I think a lot of things has been changed. Businesses have to be more focused more on the BCP, business continuity plan. Why? Because the supply chain has been disrupted. GDP forecast is also being revised in Singapore. A lot of us are to work at home and starting to understand how to work at home, adopting digital solutions. There's a drastic drop of income, and most of the business here or the local SME unable to pay the rent as well as the staff salary, and we are looking at a lot of material that is not being imported into Singapore because the borders are closed. Now, this is one of our article that is later down in the Chinese news station. Singapore must be ready for disruption due to local COVID-19 lockdown. GDP has also contracted by 2.2%. Okay, some of the challenges faced by F&B. Okay, events are postponed, restaurants are closed down. Yesterday, during the extension of circuit breaker news, barber shops or cake shops, bubble teas shops, and all these kind of part of the essential service are also closed down. So it's just to limit the movement. So how is Singapore addressing to these challenges? All right, what we are looking at rising of the unemployment rate. All right, and the company is losing out of the cash flow because they cannot fulfill their contract. They cannot pay the rental. They are incurring rental costs, this kind of stuff. So Singapore government came in right away and said that, right, how do we want to save the jobs and how do we reduce the loss of cash flow by providing grants and support for companies and individuals. They also proposed law to protect businesses as well as defer of tax payment. So these are some of the things that our Singapore government is doing. As to whether is it enough, I think that is very subjective, but I think so far they have been trying to help employees to retain their jobs. They're also trying to, through other means, to help to improve the cash flow of the companies. Now, altogether, there are actually four budget, all right, and one that is extended yesterday. So we have the Unity budget, we have the Resilient budget, and you can see the other two over there. All right, so I will not break the whole presentation up into individual budget, but I'll probably let you know what is the initial budget and later what some of the COVID-19 measures that is coming out for the rest of the budget. Now, when the Unity budget was given, the initial budget that was given back in February, okay, the aim was very clear. Okay, there has two aims. First is to help local companies to expand their business, and at the same time also improving the. All right, but so how do they help? So extending the double tax deduction for internationalization to 31st December 2025. So what is this double tax deduction for internationalization means? All right, for some companies that are always sending out staff or employees to overseas to develop new business, to open a new market, to new clients, the entertainment costs, the transport costs, the traveling costs, the meal costs, these are entitled to double tax deduction. So there is a cap. All right, this scheme has already been going on for some time. Okay, so is the idea of it is just to make sure that as an MNC, when you are going overseas, these are the items that allows you to claim more, you get allowed to claim more deduction. Extending the merger and acquisition scheme to 31st December 2025. All right, this allows companies, especially in the current situation. I have clients in MNC that comes to me and ask me, what can we do in this COVID-19 scenario where seems that there is the more of the scheme later on that we will touch on is to help the local. What can MNC do? So I tell them this is a great time for some of MNC to consolidate their market position. If you have enough cash reserve, you can actually start to acquire the smaller player or consolidate your own position in the market. Through this merger and acquisition scheme, it allows you to have a further deduction, all right, in the acquisition cost against your profitable income. So another area is the extent of the certainty of company gain on disposal of ordinary shares to 31st December 2007. I think as most of us know that Singapore don't have capital gain tax, and how do we determine that this current transaction is capital in nature and not revenue in nature? All right, so they have a safe harbor rule of about 2 years. If you hold the investment for at least 2 years, then you are less likely to be considered, right? To be less likely to be considered as a revenue, and you'll be more deemed as a capital in nature. Okay, that means that your gains will not be taxed in Singapore. Next, improving cash flow. Over here at the very initial, they only extend put in another 2 more months of installment when you're filing your ECI, and they also allowed some of the losses to be carried back. And of course, they put in the accelerated capital allowance as well as renovation expenses and improve the wages credit scheme. I'll touch on the losses carried back later. Now, what is the carryback losses? The carryback losses over here that we are talking about here is that the taxpayer can carry back the YA2020, which is this year losses, of back to 3 years. All right. So that means that if you are incurring losses for this year because of COVID-19, right, you're incurring a lot of losses, and the last 3 years you have profits, you can carry back these losses to offset your previous year losses, and you immediately get the refund back from our IRAS, our tax authority. Let me show you an example over here. If you notice that the YA2020, there is a total losses of 150K over here. Right, the amount of losses that can be carried back is about 100K. And this is distributed back to the last 3 financial year. YA, when we're talking about YA, just to let everybody know, YA is actually called the year of assessment. It's not year ended. So we are talking about year ended 2016 over here, 2017, 2018, because Singapore is taxed on the preceding year basis, which means that whatever you earn this year, you'll be taxed next year. All right, so we are looking at when we look at YA 2017, we are looking at the year ended 2016. So in the YA 2017, you have a chargeable income of 20,000. In 18, you have a chargeable income of 20,000. At 19, you have a chargeable income of 80,000. All right, so these losses of 150K, only 100K is allowed to be carried back. So it's offset your YA 2017, YA 2018, YA 2019. All right, so thereby reducing the chargeable income to nil for these 2 years. And finally, for your YA 2019, it reduced to 20,000. So the tax payable then result to approximately about 1,020. Now, the original tax payable, say for example, you are getting 638, you're paying 638, you are 765 and 5,001 in YA 2019. After you revise, these are the immediate tax refund that you'll be getting back from the IRAS, our IRAS. So for some companies, please discuss with your tax advisor. All right, if you need, let me know that whether is it more beneficial for you to carry back your losses, or should your losses be continued to carry forward to offset your future profit. Now, some of the tax changes in YA 2020, I'll just touch on a very quick one. I think for most of the company, for MNC or because for during MNC wise, there are some most of you are 100% foreign owned, and therefore you should be entitled to this partial tax exemption. Now, for this partial tax exemption, what happened here is before this year, the 75% of the first 10,000 is actually tax free. 50% of the next 290,000 is also tax free. So the maximum that you are getting out of the first 300,000 is 152,500. Now, take a look at the YA 2020. It has changed two ways, two factors have changed. Just take a look over here. We still remain at 75% of the first 10,000, but 50% of the next 190. So effectively, it has reduced 100K from the partial tax exemption. So the maximum partial tax exemption that you are having is 100,000, 102,500. So the tax payable has actually increased by addition of 8,005. For some of the audience, later on we will be sharing our slide, so not to worry. Later, Mina, we will share the slide with you all. Now, for the new startup exemption, okay, for the new startup exemption, which means that if you are a newly set up company in Singapore, all right, and at least 10% of the shares is held by individual, you will be entitled to this new startup exemption for the first 3 years. All right. So what happened here is that it also reduced the 100,000 from the tax exemption over here. You can see previously was 200, but right now is at 100. And another very important area that it has changes, instead of 100% of the first 100,000 is exempted from tax, it has changed to 75%. So what this means is that government is recognizing that even startup should pay a little bit of tax and not totally tax free, right, for the first 100,000. Previously, we have companies, we have clients that comes over and say that, all right, with this new startup exemption scheme, what I'm going to do is that I'm going to set up multiple companies across the 3 years. Every time after on the third year, I will set another one, and so that I can entitle to the new startup exemption. So it's a little bit more on the abusement of the tax exemption scheme. So what happened here is that they put in the 75,000, so to make sure that every startup do pay a little bit of tax. So if you see here, based on the chargeable income of 300,000 previously, all right, we are actually paying an additional of 12,750. Now, in YA 2020, even for the year ended 2019, there is a corporate tax rebate at 25%, capped at 15,000, which means that wherever the computation you have computed based on your tax payable, there will be a 25% rebate, okay, capped at 15,000. Now, I'd like to introduce to all of you on what is an effective tax rate. Effective tax rate that we're talking about here is we are looking at the total tax payable divided by your chargeable income. So from every dollar you earn, you pay X amount of tax. So that will be the effective tax rate. Now, let's take a look over here. With the chargeable income of 200,000 and the less the partial tax exemption scheme, all right, out of the 200,000, you are only paying 12,431 of tax. That your effective tax rate is at 6.22%. Even though you are paying, even though the corporate tax rate is at 17%, the effective tax rate is only at about 6.22%. So in order to utilize your corporate tax rebate fully, just to let me go back to a while, your corporate tax rebate is, we are talking about over here, this 25%. If you want to use fully for ladies, I think you should know, I think you should be more aware of this. You know, it's like you're having a discount voucher of 25%. How do you make full use of it? So this is the magic number. So your chargeable income should not exceed 455,000. All right. So to effectively use the corporate tax rebate. Of course, anything that below this amount that you use, all right, you are already using the corporate tax rebate, but it's not fully used. Anything that's above this number, all right, that means that your whatever the income is taxed at 17%. Now let's compare the effective tax rate. Now at the 200,000 mark, your effective tax rate is only at 6.22%. At a million mark, is only at 13.76%. Okay, after the partial tax exemption has your tax rebate. Now take a look at the effective tax rate chart. You can see over here 200,000 at 6.22. Just like I mentioned, at 1 million is 13.76% only. So some of the tips to maximize the return for some companies that is having less than 455,000. Okay, you have already bought quite a number of equipment, and you are able to claim capital allowance. You may choose to defer your capital allowance. Why? Because you want to make full use of the corporate tax rebate. So one thing what you can do is that you can defer your capital allowance to future years to offset future profits. Meanwhile, you are using the corporate tax rebate to offset your chargeable income. Another thing that you can do here is that you can bring in your taxable foreign source income that has been kept overseas. You can bring them in so that you can make use of the corporate tax rebate to offset it. For some companies that are having more than 452, okay, so you can try to utilize any deferred capital allowance that you have right now. So for some companies, especially MNC who are in group structure. Now, what is a group structure? The group structure, say for example, you have a holding company and you have two subsidiaries in Singapore, say for A and B, say for example. A is making a loss, B is making a profit. Okay, you can make use of the group relief to transfer the loss from one company to the other. So that will help you to maximize your tax benefit. And especially in the current scene where COVID-19 is hurting the business, you opt to maximize your tax profit and retain more cash in your company. Now, just take note of for some of the administrative changes. All right, all companies are required to submit their income tax returns via online from now onwards. So you need to set up your Corpus account. Now, these are for sole proprietorship as well as partnership. I will probably go a little bit faster because I want to leave more questions for Q&A to answer. Now, this is our individual income tax rate. All right. So you can see over here the maximum income tax rate that we are looking at is at 22%. Now, so the highest personal tax rate at 22% compared to the income tax rate of 17%, there is a difference of about 5%. Now, when that happens, if you compare the tax rate between the tax between the business as well as company, you will notice that at this circle at 80,000 mark, after 80,000 mark, wise, the business, which is referring to sole proprietor as well as partnership, you are incurring more taxes than the company. All right, you are incurring more taxes than the company. So if you're owning a sole proprietor right now and you're earning about 100,000, you may want to consider starting up a new company instead of using a sole proprietorship. Now, when you form a new company, this chart shows you that if you form a new company, same thing at 80,000 mark, you are already incurring more taxes than the private limited because of the tax exemption scheme for newly incorporated company. So what should you do now? You should probably incorporate your company and make sure that you have a strong commercial reason in doing so. Okay, commercial reason means if our tax authority comes to you and asks you, why do you need to set up a private limited, whether you have already have your sole proprietorship for so long, you would not want to tell them that you set up the company because of the tax incentive. You probably need to make sure that you have other stronger commercial reasons, such as you want to make sure that you have legal liabilities, and that is part of your overall strategy. So these are some of the good strong commercial reasons that you should have with you. So for individual, you may want to set up and contribute to the SRS account because that will allow you to have more deduction and the SRS accounts goes into your own individual SRS account, actually investment account, like something like a CPF on what the local is paying. That account allows you to do investment, and any money that is stayed in the SRS, the gains will be tax free. All right, but when you draw out, then you will be subjected to tax gain. Okay, you can top up your own and family member CPF account, and of course, attend some of the courses that are related to your work development. And of course, if for those individuals that are very rich and you have nowhere to spend your money, please consider donating to some of the Institute of Public Character. I think they really need your help right now. So are there any ways to decrease your tax for those individual that owns a residential property? Okay, current rule here is that you can claim rental expense based on 15% of the gross rental income in lieu of the actual amount for deductible expenses. Now, previously we have a lot of feedback to the IRAS. Some of the owner is saying that they can't find their receipts. They don't know which one to claim, which are things that are allowed to claim against their rental income. Uh, so the IRAS came out with this rule and said that, all right, if that is the case, I will allow you to claim 15% without any supporting. And once you claim 50% of the gross rental income, any more expenses above 15% you can't claim. Alternatively, if you don't want to make use of the 15% mark, okay, you can use the actual amount, which means that you have to support with receipts, you have to support with payment vouchers, just to make sure that you are allowed to claim for this deduction. All right, for those that are private hire, under private hire vehicle or taxi driver, you can claim 60% of the driving income as a deemed expenses. Why did they come up with this rule? Because previously, these taxi driver or the private car hire, Grab, or previously we have Uber, private car expenses are is non-deductible. So that means that whatever they are earning, they are incurring the expenses, but yet these expenses can't be deducted. All right, for individuals who is earning commission income, you can actually claim 25% of the commission income as the expenses or the actual expenses. Okay, but this is in order to claim the 25% of the commission income, the commission income cannot be more than 50,000. All right, for married individuals who have babies, you may be allowed to claim parenthood tax rebate. And currently the personal tax relief is actually capped at 80,000. So this actually affects mother that has gross income of more than 100,000 and has 3 children. Let me show you an example on this. Imagine that the mother was actually earning an employment income of 100,000, and they could claim the working mother child relief, which is the first child at 15%, second child at 20%, third child at 25% of the employment income. So the relief from working mother child relief is at 60,000. Okay, the CPF contribution is 20,000, and the qualifying child relief is also another 12,000. So these are the relief that the mother can claim. But you see, the working mother child relief as well as the CPF contribution wise, it has already maxed out to 80,000. So this means that the other two, the qualifying child relief as well as the parent relief, will be forfeited. Now, don't try to give away all this relief unnecessarily. So what happened here is that your qualifying child relief, you can pass it over to your husband to use. So thereby reducing your husband's chargeable income as well as tax payable, including the parent relief. Right? So it's not necessary for you to top up the CPF or the SRS account, okay? Or you can give your parents relief to your spouse or your siblings, as I mentioned just now. So the goods and service tax over here that we are talking about is actually will be. I think everyone will know that it's going to be increased from 7% to 9% somewhere between 2022 to 2025. All right. So just slightly take note that the GST wise, there's two major change. GST is also applicable to companies that procures services from overseas supplier, B2B that we are talking about, as well as GST is also applicable to overseas companies that provide digital service that were referring to the B2C. Now, I'll give you a understanding of what is a reverse chart. I think for most of you may know what is a reverse chart. What happened here is if the company A that is based in Singapore provides service to the customer, the customer will have to pay an additional 7% GST. All right, will pay additional 7% GST. But if they buy the service from the company B that is based in overseas, all right, they don't need to pay the GST. So what happened here is that the customer will tend to buy service from overseas because in order to avoid the 7% GST. So that means that the market, the customer is basing the buying decision based on tax incentive, based on tax rate, based on GST instead of market conditions. So that's a situation where the government try to avoid. So what happened here is that the company, Singapore company, will need to account, which is the customer, will need to account for the GST as though he's the supplier. But this is only apply for partially exempted GST business. Okay, and this overseas vendor registration is referring to those that are making B2C supplies, such as Netflix. So if your global turnover is more than 1 million and the supply of digital service in Singapore exceeds 100,000, you are required to register for GST over here. Now, the government support for businesses, I think before I move on to the government support, which we will touch more about the COVID-19 measures. All right. So I will just pause here for a while, a quick one, probably of 5 to 10 minutes, and answer some of the questions that is relating to the previous slides. Let me know. I will just stop sharing my screen for now. Is there any question that you all want to ask me? You all can unmute yourself first, but one at a time, please.
Hi, Teck Keng. There is one question in the chat. And maybe the person whose question it was, I want to ask it. I can see Mina has posted it. So is it
Can just a minute. So the question over here, I think you say which are the new support? I'm assuming that is the question. Which are the new support measures will be available for locally registered SME companies owned more than 70% by a foreign entity? So how about those fully owned subsidiary of foreign large corporation? Now, if you are just purely talking about just now the few slides that we are talking about, I think Shah has the merger and acquisition scheme, or double taxation, double tax deduction for internationalization. I think these are the things that, regardless of whether are you foreignly owned, fully foreignly owned, or you have more than 70% owned, you can make use of those. But if you are talking about these schemes that is launched, Shad has in relation to COVID-19, or later on, which we will touch on, the job support scheme that requires a 30%, at least a 30% local shareholding. All right, and the some of the help that is rendered by the government under the COVID-19 scheme, these are also requires at least 30% local shareholding. I will touch on this one later on, more towards later on. Is there other question regarding the partial tax exemption scheme or the tax exemption scheme for newly incorporated companies? All right. If no, I'll probably goes on,
Yeah,
because I think most of you are
sorry,
interested
may I
in
just
the
ask?
government support later on. I will just, yeah.
Hi, my
Please
name is
go ahead.
Anna Kukis Pedersen, and yeah, my company falls under the newly formed taxation, and I was a little bit surprised to hear that there seems to be tougher taxation for newly formed companies. Or did I misunderstand your point about the
No, you did.
rebate?
Hi, Anna. I think there is a no. You have not heard wrongly. I think it since this tax exemption scheme has released last year, and what happened here, just of 100% of your first 100,000 is actually tax free. They actually only allowed 75%
Mm.
to be tax free for the first 100,000, which means you had to pay a minimum of 25%. That's right. That was before the COVID-19. All right, that was before the COVID-19, and they are actually trying to convey the message, to the entrepreneur over here, say, you have to pay tax here. I hope I understand your. I hope question, Anna.
Yeah. You did. Thanks, Teck Keng. That was, I hadn't been so clear as to what was the reason behind making that decision. So thank you for clarifying that. That was really helpful.
No problem, will do. So, but of course, if you are setting up a company here in Singapore, it will definitely be much more better than sole proprietor. So just take note about just now the 80K mark for some of those that are still in sole proprietorship. So take note about that. All right. Is there any more question? If not, I'll just move on. Move on. Most affected in sector. So
Teck Keng, the line seems to be a little bit bad. I don't know, is it because of my connection or is it for everybody? But I was wondering it might help if
government is trying their
post your
best to actually help them. So what happened here is that they support scheme.
Teck Keng,
Do I
we are not hearing
let me
you.
repeat the last slide?
So Teck Keng, the line is very bad at the moment. I'm wondering if it helps if you turn off your camera. Just show the slides because we can't hear you at the moment. But if you turn off your camera, the line may be a little
And
better.
we'll do. Just give me a minute. All right, is it better now?
Yes.
Yes, we can hear you now. So we missed everything you said after the question.
No problem. No problem. No, let me just go back. All right. I think for this COVID-19, the most affected industry sector is this 5 sector, and the government aims to help this 5 sector first: aviation, tourism, F&B, then transport sector, as well as the art and culture sector. Now, they launched the job support scheme. They launched the job support scheme to 25% grant on the gross monthly wages, capped at 4,006 for each local employees. Now, the local employees here that we are talking about, Singapore PR, permanent resident. Then 75% grant in April for all sector. Previously, they only grant slightly better 75% as 50% for the 5 sector that I talked to you all just now. But right now, they are saying the 75% grant in April 2020. Based on yesterday, we are trying to confirm, if I'm not mistaken, we are also trying to confirm that based on yesterday, the extension of the circuit breaker, 75% will probably be offered for the salary in May 2020. Over here, under the business support here, the airline as well as qualifying licensed hotel travel agent, 75% of the first 4,006 will be supported. For the food shops and the food store, 50% of the 4,006 of the gross monthly wages per local employee is supported. I just saw a question that comes in, I think, regarding the EP as employment pass. Employment pass wise is not considered as a local employee. Just for a quick one, employment pass doesn't is not considered as a local employee. All right. Now, 75% of the just now 75% on May will be covered. Select shareholders and director wages will be covered. What is this? What is this about? All right. Because previously wise is that some of the business owner, when they transit from a sole proprietor to a private limited, some of them did not draw salary because they are the owner of the business and they are relatively still their business is relatively new and they are still trying their best to get the business up and running. So what happened here is that they are not considered as a sole proprietor, they are not considered as a self-employed. Okay? They are considered as self-employed. And some of them may definitely they are the shareholder. They are not entitled to the job support scheme in this case. So yesterday announcement enhanced yesterday is telling say that all right, if you are a shareholder or a director of the company and you have also contributed CPF, then you are allowed to claim your salary is allowed to claim the 75% subsidies. Or the question later. Now, okay, let's look at the computation over here. By right, the October 2019, it should only subsidize 25%. But what happened here is that the government recognized that the business are suffering and they require immediate cash help. So what happened here is they are giving out 75% of the 75% of the October 2000 wages first. All right. Then followed by 25% November, 25% December. All right. So what happened here is that this one is the enhancement for yesterday, the 75% of the November 2019. When come down to the payout in July, where they are supposed to pay out the February, March, and April. All right, February, March, and April subsidies out. They will compute the 75% of the April 2020. They will minus off the 50% of the October 2019 salary. Okay, so that is what is going on. For the payout number 3, this is also the same. So this is how, because I have a lot of clients that comes to me say, oh, all right, now is April 2020. How much money am I getting? All right. So take a look at this, particularly this column over here. All right, April 2020. In the April 2020, you will receive the payout for these 3 months. May 2020, you're receiving for this additional payout. July 2020, you're receiving February, March, and April. Of October, you're receiving the May, June, July. Now, the extension of the job support scheme. Okay, right now, based on yesterday's slides, based on yesterday's news, the wages of a director and shareholder of a company now covered. The May payout will also include the payout one disbursement. Okay, so the condition is that the company that is must be registered before 20th of April. Wages of the directors and shareholder with accessible income of 100,000 will be allowed to claim for the JSS. Now, for the foreign worker levy, foreign worker here refers to those that are under the work permit as well as the S pass. Okay, work permit as well as the S pass holder. All right, so every month you are paying the worker levy for both of them. All right, so therefore the worker levy for April and May will be waived off. Then for next, there will also be a rebate of 1,500 for each work permit or S pass holder here. So about the enhanced property tax rebate, all right, there was an increase in property tax rebate of for qualifying commercial property to 100%. All right, qualifying commercial property referring to hotel, service, apartment, tourist attraction. So for non-residential property, you will receive a property tax rebate of 30%. Now, the MRA scheme, all right. Some of the companies still are not sure what is the MRA scheme about. MRA scheme is Market Readiness Assessment Assistant Grant. This grants helps companies, local companies, to venture overseas by subsidizing some of their costs. All right. So the grant cap has also increased to 100,000 per new market per company from 1st of April 2020 to 31st March 2023. Let me give you an example. For example, the overseas marketing promotion, all right, refers to overseas marketing and PR activities. Business matching, say what is business matching about? For example, I want to venture into Vietnam. I need someone to help me to find my supplier, my distributor, and then get someone that is in Vietnam to help me to find this distributor. Pay this $3,000, for example, to help me to find this distributor, to a supplier. Then the this $3,000 will be subsidized at probably about 70%. 70% from government. This includes the overseas market setup. All right, the market entry. For example, if I want to set up a new subsidiary, or I want to set up a new go into a joint venture or agreement in a new country. All right, then the cost of hiring, the cost of hiring the professional to incorporate the company can be subsidized under the MRA grant. Now, for this PSG grant, all right, this PSG grant has been here for some time already. Usually it replaced the PIC grant that was given to the Singapore companies previously. So PSG grant over here has some equipments and some item that has already been pre-approved by this PSG grant. The subsidy previously was at 70%, but right now they raised the maximum support to 80%. But please do note that you don't need to have a local shareholding of about 30%. So for this COVID-19, they actually included these 4 new items: some of the online collaboration tools. You probably say, for example, you have to sign up with Singtel to use Zoom or use the online collaboration video conferencing. Just a minute. So can you hear me now? Or you
Yes, we can hear you.
as mentioning that you all cannot hear me? All right, thank you very much. So the online collaboration tools, virtual meetings, queue management system, as well as temperature screening solution. So currently they are launching the newly enhancement here is the laptop plus this 365 package is also added into the list, but you need to sign up with the Singtel on the M1 in order to receive this promotion, in order to make use of this grant, which is at 80% for those that has local shareholding about 30%. So up to 3 packages per company can do it. EDG grant. All right, this EDG grant also shareholding of 30% at minimum. So you need to unfortunately, if you are 100% owned by foreigner, you can't make use of the EDG grant, because the EDG grant, as well as just now the MRA grant, the very primary objective is actually to help the local SME, local business who have at least 70%, who have at least 30% to move overseas, to help them to improve the Singapore branding. So for EDG grant wise, they raise the maximum support level from previously at 70% to 80%, and was severely impact. Cash flow support. Now, they also expanded the temporary bridging loan program to provide additional cash flow support, increase the maximum loan quantum, and of course, to increase the maximum loan quantum to 10 million under the enterprise financing scheme. All right. So these are all to assist the local SME or the business here to tide over this COVID-19 period, because I think they recognize that business need a lot of support, because since all of us are at home and not all the companies are geared up to work from home. So these are the things that they are trying to assess. So there will lower interest rate, the local between 2%. So summary of the grants and needs a minimum of 30%. So one way is that you may want to consider, some of the companies there, you may want to consider getting getting a nominee shareholder, a local nominee shareholder. That could be one of the way that or through certain tax structuring to protect your interest also. Those tax structuring to make sure that you have a minimum 30%, because the minimum 30% is talking about the ultimate local shareholding. Right? Now, defer of the corporate tax for companies that are incurring a lot of corporate tax for the previous year or the coming year. All right, so companies they allow you to defer the corporate tax, not pay. It's not saying that you don't have to pay, but it's saying that you have to allow you to defer and spread out the payments to help you with your cash flow again. Take note that this is actually a proposed law to protect some of the businesses. Some of the commercial tenants may hold off rental obligation for at least 6 months up to a year. Okay, so they may not have enough cash to pay the rental. So what happened here is that the rent will still continue to accrue and remain payable. I think the government is saying that no, you cannot, saying to the landlord that no, you cannot kick the tenant out. All right, you cannot kick the tenant out just because that during this period they are unable to pay the rent. You need to give them some leeway. So example over here, the restaurant is unable to pay the rental expense. So what can the landlord do? The landlord can terminate the restaurant lease, repossess the restaurant premises, or start to have an insolvency proceeding. So these are not allowed during this period of time. So excuse me. So the contractor may be protected from unable to carry out the contractual obligation due to COVID-19. So this covers the obligation to perform on or after 1st of February 2020. So landlord, another thing here is that IRAS will be giving back tax rebate to the landlords, and the landlords need to pass this full rebate back to the tenants. All right, they are not supposed to impose conditions when passing on the rebate, which means that, for example, if by right the landlord have to pay a property tax of $10,000, now they no need to pay this $10,000. They need to pass this $10,000 rebate back to the tenant. Okay, and how do they pass this rebate back? They may want to apportion based on the floor area if they have two or more tenants. They will have to think of ways and pass this rebate back to them. They are not allowed to keep the rebate for themselves. So the government support for the employees here, $500 one-time grant, and of course $800 monthly grant. I will just do a very quick one over here. So the summary of the budget here is the cost of the budget here is expected to be 59.9 billion. 21 billion is to be drawn on the past reserve. So you can see from this chart here is that the estimated revenue that is coming in here is mostly all from corporate income tax, followed by the personal income tax. GST is also expected to be another one that is coming up in the next few years. Now I'm going to go very quickly on the last few slides before we go into the Q&A, because everybody has quite a lot of questions to ask. Some of the tax consideration, because Singapore over here is trying to be the intellectual property hub for a lot of countries, a lot of businesses here also. So what are some of the reasons for moving some of the companies here in Singapore? They may have a lot of IP, okay, intellectual property here in Singapore, and they some of them come over to us and say, they may think of moving the IP out of Singapore over here. So why? Because some of the country may have better tax incentive, they may have better resources, and they may be having cost saving. But what I'm think over here is that Singapore is trying to be the IP been giving quite a bit of incentive out. So if you are thinking of moving the IP out, I think you have to think, if you think differently, you have to think differently right now. Because Singapore being a financial hub, there could be a lot of better tax structuring that can be done with your IP. Okay. So if you want to move your intellectual property offshore, some issue that you need to consider, such as the permanent establishment issue. Are they going to be paying tax over at the offshore? When you for the intellectual property, you are collecting the royalty income that is paid by the payee to you. Sometimes they will incur withholding tax. So which country should you move your IP to? There are also transfer pricing issues leading to the BEPS program. Transfer pricing over here referring to between two related party. You are charging the royalty income to one party and the other party is paying. So is this reasonable or not? In Singapore, here there's the compulsory transfer pricing documentation that need to be done if your related party transaction between both of you exceed $1 million. So these are some of the conditions that you need to, if you have not been doing for MNC, if you have not been doing up your transfer pricing documentation, you have to start to do now. Because when the IRS calls upon you and requests for your transfer pricing documentation, they will know immediately whether do you have all this ready. Because when they ask for you and you say you need to get more to ready, they will give you the extension, but you will be under their target because they knew that you have not done. And for transfer pricing documentation, it probably takes a minimum of 4 months to 6 months to complete. So please start early for the transfer pricing documentation. The issue here is you may if you transfer the intellectual property out to the offshore, you may have PE issue, as I mentioned just now. It really depends on whether you have activities carried out elsewhere and the extent of the present overseas. You need to examine the double tax agreement of the country to assess the possibility and the effect of having a PE. On this arrangement, I would say arrangement for the arrangement for intellectual property, how you structure, how you move the supply chain, this kind of stuff, it should be properly thought out and assessed based on the tax implication. I have clients that decided to structure by themselves, and what happened here is that the IRAS came over and asked them, no, why is this intellectual property housed in the BVI company? What is the purpose? When they can't give a proper explanation, IRAS actually came out and says that, all right, we are going to ignore that and we are going to tax you in Singapore. So that is the power of IRAS when they evoke Section 33. Right? If they think that you are doing this arrangement for tax purpose, they will cancel out the effect and tax you accordingly. So the difference between tax evasion as well as tax planning comes down to two words, as I always stress. It comes down to reason as well as arrangement. You need to have a reason first before you do an arrangement, and not to do an arrangement first and later think of a reason. So please seriously think about doing a transfer pricing documentation. For the transfer pricing, you need to identify your intangible assets, such as what's your intellectual property. You need to focus on the ownership of the intangible assets, particularly in these 5 areas: the development, who is developing the intellectual property, who is doing the enhancement, who is maintaining, then where is the legal liability of this legal ownership of these intangible assets, and who is actually these intangible assets and generate profits. So these are the 5 areas that normally doing a transfer pricing documentation or the us is actually focusing on. So we need to focus on the commercial substance and focus on the TP documentation. Now, this particular topic on the intellectual property is actually a little bit is actually could be another hours long. So over here we are talking a very brief description of what's going what should you be looking at. All right, so I will probably go into Q&A first to talk more about the budget. I think let me just take a look at the chat. I will stop sharing my slide. No, I will continue sharing my slide and I will just answer the question. Just give me a minute while I draw out the question. Give me a minute. Let me see where's the last question. Okay, we have this question. We have this question for Carl. Carl, your question will be: have you heard of any changes so that the JSS job support scheme would also cover the employees under the EP or SP? My answer here is no. I have not heard of any changes, and I don't think that the job support scheme will cover those that is under EP or the support scheme. Because why? The job support schemes is already depleting the Singapore budget, the Singapore reserve, and they want to keep this reserve, especially they are tapping on this reserve, especially and giving back to the locals, referring to Singapore PR as well as Singapore citizen. So I don't think they will use the Singapore reserve and use it on individual that are under the employment pass or the S pass. Next question here is that if the shareholder and the from Anna, if the shareholder and the MD is on employment pass, they are still not included in the JSS scheme. The answer here is yes, you are still not in the JSS scheme. I hope I answer both Carl and Anna's question. Do you have anything to add on?
So just to clarify, when you say local, it means citizen and permanent resident.
That's right. It means citizen, Singapore citizen, and Singapore PR.
Okay, thank you.
Oh, my pleasure. And another question from Joanne is, what is defined as a CPF contribution and is MediSave sufficient? CPF contribution actually refers to the funds, the deductions or the contribution by the employee and the employer monthly. Okay, when it's usually deducted from the wage based on their wages. I don't think MediSave is sufficient because MediSave is a contribution wise. So how the government is actually basing on the monthly CPF contribution. All right, monthly CPF contribution is like a all right, it's a proficiency fund. It's basing on the monthly contribution to assess what is the salary of the local employee, referring to again the Singaporean as well as Singapore PR, because only these two categories need to contribute CPF. Basing on this one to determine what is the gross salary, and from there they work out the 75% or the 25% to refund back to the organization. Joanne, I hope I will answer your question. If not, I will on. The next question is, why is it in the payout tree it minus the 75% and not the 50% of the wages if you're under tier 3, 25%? Just a minute. Let me just read this question again. Why is it in payout 3 minus off 75% and not 50% of the November wages? You're under tier 3. I understand your point over here. You are saying that how come it's not, how come here should be another 50% and here should be 50% and not 70. Why is it not 50% and 75%? Let me verify this portion for you. If I'm not mistaken, it could be a typo. But
Yeah,
let me
I
just
thought it.
verify, and I will amend it in my slide. That's right.
Yeah, I thought it
think it
should
could
be
be
the
a.
same as
It could,
payout too.
that's right. So let me amend my slide. My apologies for that because this one just came in yesterday. So let me
Wait a
let me just
second.
amend that.
May I
All
add to
right.
this? May I add to this?
Now, please go
I
ahead.
believe that, yes, I believe this is referring to, so they are paying out JSS now based on what we paid in October and November. If there is a change in your salaries paid out, they will balance this out. They're paying for April based on October. So say you were paying in October 100,000 and then you hired somebody in April and now you have 110,000. The 10,000 is subject for payout. Does this make any sense?
Yes, I mean it's a balancing figure
Yeah,
because they are
because they don't have the April or May
the actual.
pages available.
Yeah, I agree to it.
So this is why they don't have the records of April and May salaries when paying out, so they have to balance it out, and they are using October and November as reference months.
Yep.
In payout 3, this will balance itself out.
And for the payout 3, because the May payout will be arranged earlier in May right now. So in October payout, you will carry out 100%, which is 75% of the November figure.
Oh, okay, okay.
I can send you an email later on to explain what this is, if that helps. It makes perfect sense, and I understand your question. I have your answer.
Will do, will do. Because they are giving out the 75% of the November wages, right? Because previously in the April 2020, they are already giving out 25% already. So the additional payout in May is giving out the 75%, the additional 75% of the November salary to help the local SME. Yeah, so that is why on the payout number 3, it minus off 75% because by right, the November 2019, you should only be entitled to 25%. We'll move on. Let me see. I think there's one more question over here from if the shareholder from Carl. If the shareholder is a PR, is this the equivalent to local ownership? Yes, it is. All right, a PR is considered as a local. All right. I think from the chat group, I don't see any more question. But from the floor, is there anyone that you want to raise any question right now? All right. If there's no question, what we'll do is that I have my I will go down to my last slide. The uh, all right. This is my name as well as my my information over here. All right. So if you want, I will type down right now. I will type down in my in the chat. I will type down in the chat group right now my email address. So if you have any question that you want to ask me regarding the budget or any tax related question, please drop me your email, and my team and I will try to answer. My team and I will try to reply to you ASAP. And I will arrange with Mina to provide you the handouts. Mina, would you want to take over?
Yes, there's a, QR code if you want to download it directly from here. And I have downloaded already, and I can share the both slides and also this recording with you later.
Right. And so thank you, Teck Keng, so much for your time. And this is very eye-opening. And I know you have been updating your slides 3 times at least now with all the COVID-19
That's
update.
right.
And I mean, the timing was perfect. There was another more changes last night. So
That's
understand
right.
that came with a very short notice. And let me put my. Okay. So thank you for all of you joining, spending your breakfast time with us. And now, due to the COVID-19 circuit breaker extension, we won't be running any face-to-face events, obviously, during month of May. Hopefully, we are able to do that again in June, so before the holidays, to have face-to-face session as well. So we have a maybe better chance for the networking as well. We will keep you informed about any upcoming webinars. So keep an eye on those. We will be organizing more webinars between now and the summer. So hopefully see you soon in our future webinars. And all please keep safe and healthy. Stay at home. And we hope to see you also face to face after this circuit breaker is over. Anything else? Anyone else? Or are we good? No,
If somebody
nothing
needs to
else?
move, you can contact me.
No,
Sorry, Rico. Rico, what did you say?
Oh no, that was Carl speaking. Sorry. Yeah, I was just letting everybody know that if you need to move, you can contact me.
Okay, very good. Thank you, Carl. Okay, well that's all from us, and have a good day.
all right. Thank you, everyone. Thank you.
Thank you.
Thank you.
Bye bye.